Hey, good morning, everybody. Today we have to talk about two big mistakes that I see a lot of investors making that are just unnecessary, and we don't have to put ourselves in the position to make these mistakes to build long-term wealth. All right, the first completely avoidable mistake is chasing the hot idea, chasing the hot asset or stock. We've seen these algorithmic stable coins, if you're in crypto space, go to zero. And now Voyager Digital, which is essentially a crypto brokerage like Coinbase but smaller, plunged after disclosing over $660 million exposure to Three Arrows Capital, which was essentially a hedge fund, a crypto hedge fund that blew up because of everything that happened with Luna. This is a publicly traded stock that, a lot of new investors, a lot of social media, a lot of people on YouTube are out there talking about and pushing as exposure to crypto. When we see this stuff, we think this is the next amazing rocket opportunity. I even have exposure to very risky stocks, Rocket Lab, for example. But what I try to make very clear is, A, there has to be a real sustainable business and market that stock is involved in. In my opinion, the history we have with publicly traded crypto companies and just crypto as a whole isn't long enough to have any real substantial money, at least of my own, invested in crypto because it's just too risky and it's completely unnecessary for building long-term wealth. Look at the millionaires and billionaires of the world that have built real businesses or real investment portfolios over the last 100 years. None of them needed to do it in Bitcoin, in crypto. And so, yes, there's people that have gotten rich off of crypto and Bitcoin or whatever, but that doesn't mean that they had a sound, sustainable, responsible investment strategy. And it doesn't even mean that they're right in their thesis over the long term. We can't mix up short-term momentum or timeliness. And the same thing, I'm not immune to this. The same thing happened to stocks that I owned coming out of COVID. I mean, this happens time and time again with different things. I'm just trying to point it out, and nobody's immune to it. We all make mistakes. I'm just trying to help people avoid making these mistakes, including myself and people close to me that I care about. The issue is trying to chase the hot thing and supercharge our returns so we can, over a short period of time, grow millions of dollars of wealth. Almost every investing mistake that I've made comes back to trying to shorten the time it takes to let compounding and investing do its thing and just, get to the goal or $1 million portfolio or whatever in a year or 2 years versus just letting compounding take care of itself and do it over a 10, 15, 20 year period time frame like a normal person and just live a good, fun, productive life doing a job that's important, spending time with people I love, and then investing as a part of my strategy, not consuming. Anyways, I'm rambling here, but this is just something I'm passionate about. And the sad thing is that, the rich people out there, the people with the huge followings that push these types of stocks or even crypto, the Michael Saylors of the world, the Raoul Pauls of the world that run Real Vision and made all those reckless claims about Ethereum and Bitcoin going to 100K last year, they're not the ones that get hurt by this. The people that follow them, that have a lot less money, that think that those are the experts they need to be listening to, and just this one thing could change their life, that put a significant amount of their personal money in it, and those are the people that get hurt. And I just hope to maybe help one person avoid doing that the next time they see some expert pushing these crazy, reckless, investment ideas. And it's not that you can't invest. Again, it's not that you can't invest in Voyager or Bitcoin or whatever. But you got to look at it as the most likely thing that happens is you lose a significant or all of your wealth, the money that's invested in that thing, when it's an asset like this. So anyways, this sadly is what's happened with $10,000 invested in Voyager since July 2021. That $10,000 is down 96%, and that $10,000 is worth $370. $370, $10,000 down to $370. That's the risk of the next rocket ship asset or idea, right? And what's a different way? What's a different thing that we could do to grow our wealth? Well, here's a number of companies, and I don't even own these companies, right? Because I am oriented towards growth. I accept that risk, but Again, the way I invest is not the way most people should invest or even have to invest, right? Here's Lowe's. Let's take a look at Lowe's over the last year. Okay, it's down 10% if you would have put $10,000 in. Now it's worth $9,000. But what if we want to grow long-term wealth? Well, a company like Lowe's over the last 10 years has turned $10,000 into $63,000. What if we go out a little longer and we look back to 1972? $10,000, just one investment of $10,000 is worth $3.45 million invested in Lowe's. And what's the difference between Lowe's and something like Voyager or these other risky things? Lowe's has this thing called revenues. And their revenues, their trailing 12-month revenues, so the amount of revenues they've earned over the last 12 months, has grown from $1.6 billion in 1985 to $95 billion today. So if you simply just watched whether the revenues continued to increase, and that was the only thing you paid attention to with Lowe's, you're in a much better place to put money into something like Lowe's and potentially grow wealth over time than these crazy risky asset classes. And again, it's like maybe you get 1% exposure to them, but you don't even need that, because every 1% in those, if it explodes, what does it really become? Does it become meaningful? I don't know. But then if you do 10 of those risky assets with 1% and they go to 0 or down 50%, you've now lost 10% of your portfolio, or 5%. Whereas if you're just looking for quality companies, and this isn't the only example. Costco, $10,000 in Costco since 1982 or 1984, worth $1.2 million today. $10,000 to $1.2 million. Alphabet, since 2004, $10,000 to $444,000. Amazon. I mean, this is just ridiculous, right? And this is obviously like success bias, two of the most successful companies. But I mean, $10,000 in Amazon to $11.2 million in, since 1997. Now, Amazon back at this time was a very risky stock back in the 2000s, but still they had $816 million in revenue. And if you just look, that the revenue just keeps growing. So as risky as it is and as expensive as the stock was seen back in the day and unprofitable and all those things, they had a real business and real revenue growth that was sustainable. You can invest in something like that. Voyager Digital, if we look at their financials, first of all, they don't have a long enough history of financials. And this is my thing with Bitcoin and crypto. The history is not long enough to dedicate any significant amount of money responsibly into that as an investment. Again, as a risk, a gamble, whatever, yes, sure. There's people out there acting like Bitcoin is everything and our entire financial system is going to crash and you've got to own Bitcoin. That theory is just so ridiculously reckless. It's unbelievable. And it is self-serving if you look at the causes of the things that those people that are pushing that narrative, the industry they're in the crypto industry. They're running a crypto fund. They're running a crypto business, whatever. And I'm not saying that stuff is all bad, but if they have that theory and that mindset, the only possible way they have it is if all of their attention, their wealth, and their effort is wrapped up in crypto. And so it's self-serving. I'm sorry, but 3 years or 2 years of history, and this is 0.1 million revenue. So what's that? I don't know, $10,000, $1,000, something like that in annual revenue, growing to 175 million. That's a lot of growth, but it's not sustainable. The only thing that could fuel that is momentum. I mean, and if I don't see that sustained for 5 years, then I'm not buying into that as a sustainable trend. So that's how we can avoid this stuff. And maybe you don't like individual stocks, and that's totally fine. This is Schwab's US Dividend Equity ETF, SCHD. Anybody can go and invest in this. And it pays a 2 or 3% dividend, so you're getting paid a dividend. It's pretty much value-oriented stocks, dividend payers. $10,000 in this since 2011 has turned into $28,000. If you can live your life and work for 95% of normal human beings that are just trying to live productive lives and invest, this is a wonderful investment for them, especially if they don't want to be exposed to individual stocks and they don't want that risk. Vanguard Growth ETF, maybe we wanted exposure to growth. And again, I talk about individual stocks. I invest in individual stocks. I'm sitting here telling you that most people shouldn't do that. It's too volatile. It's too risky. And an exposure to a dividend ETF or a growth ETF or an S&P 500 ETF or a cloud ETF, if you want cloud exposure, is perfectly fine and substantial and will grow exponential wealth over time. It's all you need. Since 2004, $10,000 invested in Vanguard Growth ETF has turned into $44,000. And imagine if you were just allocating to this every month. It's even more than that. It's even more significant than that. The Global X Cloud Computing ETF, if you wanted riskier exposure, it's only been around since 2019, and so the history's not long enough. Again, this is something I wouldn't put, like, just because the history's not there, I wouldn't put a significant amount of my wealth in anything that the history isn't there to support. But we see it was tremendously effective during the run-up and all the craziness. Grew that $10,000 to over $20,000 in less than 2 years. Amazing. It's 100% return. But now, super volatile. And it's down to 11,000. But even something like this for risk is, in my opinion, better than just these crazy one-off things where we're trying to get rich overnight. And then, I mean, the S&P 500, the SPY, anybody, again, can invest in this. Since 1993, $10,000 has turned into $85,000. Is that lights out amazing? You're going to write stories about it and have 500,000 people following you because you're a prophet and you talked about it and you predicted its short-term price movement? Nope. Will it change your life if you work, earn more money over time, spend time with your family, get better at your job, get promotions, get different jobs, start a business, and just invest your money into a percentage of your income into the S&P 500 every month? Yes, will change your life and you'll be a millionaire over time.